And then with the current market right now, we're seeing Bitcoin rally from 29,000 recent lows. Do you both believe hodling is the right strategy? And Michael, I've got to ask, are you hodling any Bitcoin on the Celsius network?
I do think hodling is the right strategy.
Mm-hmm.
I think that that there are a lot of strategies for investment. And one strategy is just to buy property and hold it for 100 years.
Mm-hmm.
That's like the equivalent of like buying all the land in New York City and just holding the land and being a landlord. I think there are other business strategies like renting, like generating yield, trading it, developing it, building buildings on it, building companies in the buildings on it, becoming investment bankers, buying and selling the companies in the buildings on the land. All of these are different things you can do. MicroStrategy's strategy is just to buy it and to hold it. That primarily is because of of the accounting, the tax, and the corporate governance issues that we face. That it's exponentially harder for us to do other things, and our strategy that we've disclosed and articulated to our shareholders is to acquire and to hold Bitcoin. But I've no doubt other companies and other investors will do more things than just buy and hold.
Mm-hmm.
Yeah, so hodling is not a new concept, right? I mean, if you go to Wall Street and you talk to financial advisors, most of them will tell you that you should be averaging in, buying in. You should not try to play the market or pick the right days to buy or sell certain stocks. So in crypto, it's just called differently. It's called hodling, right? But so I think the people that hodled and bought consistently, like Michael, right, just started to buy and then added to the position, have done better than the people who try to time the market. Mm-hmm. And now there are a few people in the world that are probably very good at this stuff and they can call tops and bottoms, but most of us, that's just not what we do for a living, right? So we are distracted, we have a life, we do other things. So I would definitely not recommend to the average Joe to try to discover if they're good or not good at picking tops and bottoms. So average in, this asset is going to increase 10 or 100x. So it doesn't really matter if you trade around the position, and you just have to decide how much exposure you want to this non-dollar denominated asset, and then average in and build up your nest egg.
Mm-hmm. We might have touched base on this a little bit before, but where do you see Bitcoin going in the second half of the year? Do you have any thoughts on that?
Well, it's difficult to predict near term, and our strategy is a decade-long strategy, which is just to buy it when we have free cash flows and hold it. And so we've just consistently been acquiring Bitcoin month by month, quarter by quarter, and expect to continue to do it. My general view of the fundamentals of Bitcoin is they've dramatically improved over the last 12 months and even over the last 6 months. I think institutional adoption has improved. I think that the Bitcoin mining sector has matured. I think there's a lot of institutional capital that has been flowing into Bitcoin, has continued to flow into Bitcoin. And I think the regulatory environment is clarifying, and it's becoming, and every single month that goes by, there's more information and more clarity. And all of those things are giving institutional investors more comfort. I think today there is a story of $125 million being invested in one Bitcoin miner. 2 days ago was a story of another Bitcoin miner coming public, raising 100 million to come public. Last week was a story of another Bitcoin miner that's going to come public. A few days before that, another company coming public. I think that by the end of the year, you'll probably have somewhere between 15 and 20 publicly traded Bitcoin companies. And with all of those companies with access to the capital markets, I think that that's very stabilizing and legitimizing for Bitcoin. And also they're serving as channels to allow large pools of capital to flow from conventional assets into Bitcoin via their securities that they're issuing. So 12 months ago, there wasn't any public company on my radar that had more than $1 million or 2 million worth of Bitcoin on their balance sheet. Right now, there are billions and billions of dollars of Bitcoin on balance sheets of publicly traded companies. And so the fundamental trend is clear. The fluctuation week by week, sometimes hard to time.
Right, and just to add to what Michael was saying, the traditionally miners used to have to sell their Bitcoin to fund their operation, but these public companies basically have access to cheap capital, right? I mean, they can raise money at 2 or 3% annualized cost capital and deploy it and basically hodl the asset that they think is going to appreciate. So instead of a lot of miners like Chinese miners selling it, now you have yet another a big component of the overall supply, basically hodling the asset. As to price, again, there's obviously a lot of speculation. What's unique about Bitcoin that is not applicable to stocks like Apple or Google or anything on Wall Street is that on Wall Street, you don't really know who is about to sell, right? So if you have tens of thousands of shareholders, at any moment, any of them can come and start dumping their shares on the market and not really know. You're not going to know how much of price impact that's going to have. With Bitcoin, most of the supplies comes from new mining. About 70%, 75% of the community is a hodlers. They don't touch the wallets. We know exactly what percentage of the wallets have not been touched for a year or two, or some of them even more than 5 years. So there's much better understanding of what the supply looks like. And now we just need to worry about demand, right? And to Michael's point, I think both on the corporate side, on the institutional side, every day you see an announcement from major banks. JP Morgan just announced they're going to be giving their customers access to GBTC and some other assets. So all that incremental supply with decreasing increasing supply and decreasing, I got myself turned around here, increasing demand and decreasing supply because of the miners hodling results in much higher prices. So, and we've kind of, the recent price drop from 60,000, 65,000 to 30,000 has basically been the double impact of GBTC sales as well as Chinese miners dumping on the market. So we know where support is. We know how much the market can take at these levels. And, I've several times mentioned that 29 to 30,000 price level as kind of the new lows. And I expect us to hit 140 to 160,000 this year. But then we're going to find new sellers, right? We're going to find new people who are probably can't sit on their hand, don't want to hodl forever. They're going to be tempted, and we're going to close the year below 100,000. That's my play, play by play for the rest of the year.